Hi and welcome back to Cheeky Crypto. Today guys, we're going to be diving down into the charts to take a look at what has been going on with Harmony One. As we get into this video, if you do find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe. Tap the bell, select all notifications, and in doing so, you are going to be kept up to date with everything that we do here at Cheeky Crypto. Right, with all of that said, done out of the way, let's jump on down into the desktop and take a look at what has been going on most recently with the price action of Harmony One. Okay guys, we're going to start things off with our hourly chart, really kind of review these most recent kind of moves and what I think is more probable in the next kind of couple of days, and then we'll build it up from there. So there are a couple of larger plays, and for the most part I'm going to just kind of remove these for a second and we'll get into that at a slightly later stage. Let's really focus in on this move. Okay, so here we actually have an impulsive move to the downside, and we can actually track this as an ABC here with an ABC up and then an ABC down and an ABC up and so forth, and you kind of get to the same kind of conclusion, right? We end up in this fourth wave high, or this high point, looking for a decrease, right? And again, everything was overbought, and we are now bringing it back all the way back down into this kind of good range. Now we actually had this coming down a little bit lower. We actually found support on 16.4, is it? Yeah, 16.4. I thought we would come down to about 16.1. So we're a little bit higher than I thought we were going to come down to. So again, the stochastic RSI is in a pretty good spot from here. So this actually looks like it's going to hold that support level. Is the one all the way over here. So that's a good point to kind of just reference, that seems to be where that has stopped. And here you can actually see and measure this as a couple of waves down as well. And for the most part, what we want to also kind of just review is this is actually really shallow. So I'm still expecting this to kind of come down a little bit further, but there might just have to be a bit of a bounce from here first. Okay, and the reason for this is obviously we have this 5 waves down, taking us down towards this 16.1 cent range, right? And that's not the only reason that I think we are likely to come into this range down here. It's actually quite a broad range as well, guys. I think some of it's probable and some of it's not. So it's all possible though. So let's actually go through it. We also have this move here, this being an entire A wave, this being a B wave, and that C wave actually brings us into there. Now, if I actually go ahead and measure this distance, we take it from here to here. And we just try to transpose that on top of our B wave. So we take the entire measurement of an A wave and we put it to the top of our B wave. The C wave, in the most common area for this C wave to finish, is on the same ratio, the same length as what our A wave was, right? And so the Fibonacci retracement tool is fantastic at taking the measurement of A wave and then basically putting it at the top of B wave to get a measurement of our C wave. So this C wave actually shows us moving down here, right? 14.5 approximately. I'll grab a horizontal ray and I'll just quickly mark that up right there, and then what I'll do is I'll remove the fib so it's not in the way. Okay, cool. So we have two targets, right? We have our fifth wave target just down here, this basically being a 1.618 of our fourth wave here. That's 16.1 cent. This whole thing could also just be an ABC move, and this ABC actually does finish down here at 14.5 on the most probable area. The other thing that's also worth noting at this point before we go on to the larger timeframes is that this is lower than our A wave, okay, and therefore meets the requirement of a C wave already. Okay, so this just down here, this 14.5, this is the most probable area. It doesn't mean it's going to happen. It just means it's the most probable area. That's usually what happens. The norm would be that the A wave is exactly the same length as our C wave. Okay, but there's no guarantee that it's going to play out exactly like that. Okay, so just note that we are already down here below the position here of our A wave. And that is the minimum requirement here of our C wave, okay? So it is already complete technically, but we want to see if that actually comes in a little bit lower on the 1-to-1 ratio, which is the most common. Now, the fifth wave, however, that minimum requirement would be a 1.618, okay? So in order for this fifth wave to be classed as a fifth wave technically, we would want that to be a 1.618, a 16.1 cent range. Okay, so I'm kind of expecting this to kind of come back down a little bit lower because we are tracking these 5 waves. Now, the other thing on these 5 waves is I don't think technically they meet the requirement of 5 waves. Let me just check. Yeah, so I mean, you can measure it, a couple of different ways, but technically speaking, no, it's not an impulsive move. But we can count it in an impulsive manner. Okay, so we can count 5 waves, but there's no guarantee that we come down to 16.1 because there's no reason for it to do so. There is no guarantee that this is this isn't technically an impulsive move down, although I have counted it as 5 waves, right? I mean, 5 waves is just what we're seeing on Bitcoin, and therefore most altcoins are also following the same direction. If we were to draw this differently, we'd end up in a very similar situation, but things would look slightly different, right? So from here, we'd actually have an A wave, a B wave, and a C wave. We then have this really micro movement here, A, B, and C. And again, drawing the 5 waves just speeds this process up quite a bit, as you can imagine. But effectively here we actually have an interesting play. So again, A, B, and C, a double top with this really small movement right inside here. It's really hard to even draw it on the hourly, right in there. And then we come down a little bit lower. So actually, I think I may have that slightly incorrect because I think there's a different thing going on. Let me just quickly check that. I think is your ABC. And then here we have a small A, B, C. There you go. Now we're getting somewhere. So here we can actually see this as an A, B, and C to the downside, and then we start to track this back to the upside, right? So all of those movements, all of that choppiness right here, you can save yourself the trouble by just writing it out as 5 waves. But it's important that we also acknowledge that it's not necessarily required for it to go to that full 1.618. Okay, so A, B, C. Up to the upside there, we can ignore all the small moves inside it and keep it nice and simple. Again, this really choppy sideways here, you can see this basically just bouncing around a lot. So in this particular example here, we can take a couple of points and then run from it. So we have a low point down here and a high point. There's also a midway point. So inside here, we also have a really tight ABC move. That one's set. And then from here, we track with this kind of move. Again, so we have a lot of really stupid kind of like tiny movements going on here, but eventually they get us into this play coming down. Okay, so I'm not going to draw anymore. You kind of get the idea. In fact, I'm going to remove a lot of that noise because it's just so messy, and really I don't want my chart to be that messy. So to save the time and the hassle on it, what we will do is we'll actually draw this up as if it were 5 waves, but just be aware that actually it doesn't meet those technical requirements for 5 waves. But obviously, if it were, then we would have a look at that 16.1. So this one, I guess the whole point of what I'm trying to say here is this particular area could also be articulated as that end move here. Okay, and therefore we don't have to worry necessarily about 16.1, but I do think where a downward direction is more probable anyway. So we can obviously take a look at this move, right? We obviously can count this again in a very similar way. Now, if we actually take this measurement from here to here, we can see that we have met a requirement for a 6th or 5th wave, right? And we've technically gone impulsive on this particular move. So what does that mean? Well, what we're looking for here is potentially 5 waves, right? And again, we can count it from a slightly higher, or we can count it from here and we go 1, 2, 3, 4, 5, etc. Now, I think what we've actually got is this is our starting position. Wave 1, wave 2 going up there. Wave 3 is here, wave 4, and this is wave 5. Okay, and now for those who do follow Elliott wave theory, will know that you'll normally end up with a 5, 3, 5, 3, 5 wave count. And so wave 1 should have 5 waves, wave 3 should have 5 waves, and wave 5 should have 5 waves. There's 5 waves here inside this 5th wave, for example, even though there was actually a lot of choppy kind of action going on within this wave 4 push to the upside. Ultimately, what that does that mean? It means that actually we've kind of already reached the requirement of this particular move, and we don't necessarily have to worry about it dropping down any lower right now. We could actually now see a bit of a reversal, and what I mean by that is we could quite comfortably see an ABC move to the upside at this point, and before worrying that we're going to be, pulling back down. Okay, so in terms of if we're a trader, this is an entry point, or we did actually have an entry point down here. That actually might be revisited as we look to lower that stochastic RSI a little bit. So yeah, be aware that we have the slightly bigger ABC move. That's still valid. That won't be invalidated unless we push higher than 23.6. So we should be aware that although this is perfectly fine for a C wave, this is the most typical. And obviously we have these impulsive moves down here. Again, if we actually zoom in here again, right, and we take a look at this 5th wave down, Be 1.618 is the minimum requirement, but there is a 2.618 and a 3.618, etc. Right? The 2.618 is 16.1 and again, that would actually line up with what we had up here for this fourth wave. So should that actually happen, that would align very, very neatly with taking this fifth wave to this fifth wave position, and everything would actually tie up very, very neatly here on our hourly chart. Okay, so overall, this correction is getting very, very close to the bottom. Okay, so it effectively means that we're right inside this sweet spot. We're within a really, really tight frame where we could potentially start to see a bit of a significant reversal, right? Really important that we kind of get that. Now, this is where we're going to go up into the larger time frames, right? The 4 hourly is oversold. I'm not going to go through the candles on this one, but it is oversold. The 8 hourly is oversold. The daily is oversold, right? So we obviously are aware that there is a bit of a play here now to the upside across all of those time frames. We can go higher, we can go into the weekly that's oversold, and the monthly is actually in a reasonably highish or medium kind of spot. So we should be cautious over what is going on with our monthly chart, but I think actually it's got plenty of room to grow regardless. It's not in an overbought position or anything like that. So the fact that all of these other time frames are in really good positions on that stochastic RSI gives us good encouragement. Here we can obviously see what is going on with a potential kind of zigzag pattern. And again, we can count this in multiple different ways. And, you know, we actually can kind of look at this as an ABC move down here from those highs that we had back in October, for example. This pullback down here goes and technically into an impulsive move, but is invalidated, right? So we can mark that up as a big extended C wave down lower. So if I grab hold of this, we can go ahead and just run those in. And then obviously we track this to the upside, and there's actually, you know, an interesting kind of wave count going on in here. 1, 2, you know, 3, 4, 5 maybe. Is even 6 in there. 1, 2, 3. 1, 2, 3, 4, 5. Oh, I did I get that right? 1, 2, 3, 4, 5, 6, 7. So it's actually corrective. So 7 waves inside there. So that's a very corrective pattern. It's not actually an impulsive move. So interesting. We obviously have overlap in there as well. So again, nothing to kind of worry about. I'll just quickly mark that up as a, you know, an ABC, but it's effectively actually 7 waves. Which is corrective. Now we're tracking down. Now this is actually the worrying part, right? Because we have this entire move that potentially takes us down lower. And you know what we want to do is we want to invalidate this if we can, to prevent that from really going down into 10.2 cent, right? And that would be, you know, significant kind of bear market kind of scenarios. Now that is a significant drop that we've had here, so we want to be very, very cautious over that. But it does look like we are looking to track to the upside. And you know, where we were, I think, is something that we need to consider. Now, obviously, this entire wave count, this C wave, as I said before, the only real requirement is that it drops down lower than the A wave, right? And we're very, very close to that right now. So dropping down into that kind of 16.1 cent range would actually technically meet the requirement for this, but it could also be a double bottom that effectively means that we then start launching from there. So if I actually zoom in on this, what if we had today, guys? We've actually had that double bottom occur. Okay, so this could be the point now of reversal. Obviously, I still think there's a little bit more room to come to the downside, but a double bottom here is a bull signal, and we should be really considering that as what it is. And this actually is the completed ABC move to the downside. Obviously, as we start to think about this in lots of different ways, there is obviously the other kind of elephant in the room, right? Which is that this is a big A wave down, this is a B wave up, and we should be looking to target, you know, 13.5 cent as the C wave low target. Okay, and should that happen, that's going to be a fantastic opportunity to accumulate. Trust me on that one. Obviously, I'm not a financial advisor. I cannot offer you financial advice, but that would be a very, very significant position to be in for accumulation. So if that is to something that happens, I will be stacking up Harmony One at that particular price. After all of this corrective action, though, we are talking about new all-time highs. If we actually take a look at this, you know, from everything that's kind of been going on, we can, of course, acknowledge, you know, that we've had a really significant run up here. We pulled back down, we actually pushed up higher. Now, if I run this in, we can see that we haven't reached the minimum requirement for that fifth wave. And instead, what we're actually looking at here is, I think, the final move before potentially taking this up into those next levels. So if we kind of count this in lots of different ways, again, blah, 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 all that kind of usual stuff. But what we actually have from the very beginning here, we have 1, 2, 3, 4, and 5. Minimum threshold is 56 cents. But I think this is going to go significantly higher. And one of the trend-based fibs that I had a while ago was about 96 cents. So things are looking pretty good from that kind of perspective, right? So once this corrective action is over, this is where I'm thinking that we are going to be launching towards. The first target being right up here towards this 59-cent range, right? So let's kind of get things into perspective. There is a bit of a downtrend right now, and obviously this is something that happened previously. And then from here, we actually saw a very, very significant run to the upside in terms of that new all-time high. That was a 696%. And obviously the narrative at the time during this point was that we were bear market, right? Which it wasn't. It was just a corrective state. And right now, we're also seeing a very similar situation where people are calling this a bear market, when actually, no, we're just corrective. All of the candles are indicating corrective action. All the candles are indicating corrective action, and therefore the push to the upside is very much real. Bear market scenarios are very, very different, and we'll get into that when those times actually do crop up. But right now is not the time for bear markets. It's actually accumulation. So right now, this is actually looking really, really good and really, really promising on these larger time frames. But we are, of course, very aware that if that double bottom doesn't hold here, then actually our launch for this new all-time high comes in slightly lower. Although, this is incredibly possible. I do not necessarily think it's probable. I think the most probable outcome is that this low area that was reached over here, this double bottom, is going to hold. At least that's my kind of hope around it, and what I believe is probably more likely to occur given the positioning and all of the stochastic RSIs and other indicators that we use here on the channel. The potential to drop down is very real, but I don't think it's likely to happen. Okay, so obviously if we go back into our hourly view, and we now have a bit of an idea, right? We have all of these kind of targets right down here in this low range, right? We have our first kind of fifth wave target coming in, right down here on that, was it 16.4? The potential to go down to 16.1 or even 14.5, they're all valid options, but there's no guarantee that they're actually required. We can actually get a reversal from here, and they are valid to continue to run to the upside. And of course, we have the more pessimistic look of 13.5 cent. Very possible, but I'm not sure it's very likely at this particular stage in this correction. So ultimately, everything's actually looking good for this last little bit of accumulation, just where we are. And then I think we are going to be moving up steadily into new all-time highs, but it is going to be a slow and gradual process that is going to take a fair amount of time to see that one come in. Now, guys, I've been through a fair amount on this video. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then go ahead and subscribe, tap the bell, select all notifications, and in doing so, you are going to be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.